Welcome back to TechKidFX for another price prediction update, and in this video I'll be giving you a price prediction update on Polygon Matic, whose current price stands at the $0.9076 mark, and here on TradingView the market is down by 0.09%. and in this video I want to give you the key scenarios that I expect to play out, basing my analysis on the Elliot wave structures, the Fibonacci's, the key areas of support and resistances, and also draw out any key chart patterns that you have information on this chart. And I'll kickstart the video by giving a brief of what has been happening on this chart. Polygon Matic from the all-time high has been seeing lower prices in this massive ABC corrective movement, which has now taken us back to around the $0.32 mark, and having done so, I believe Polygon Matic has done the minimum that we expected it to do in its ABC corrective movement, and very soon we are going to see a very nice bounce to the upper side, obeying this Elliot wave structure, having a wave 5 taking us back to an all-time high. But before we get to an all-time high, we first need to see this first wave to the upper side information right here, and I believe that is what is playing out over here on the Polygon Matic chart. And if I jump to the 4-hour chart, here on the 4-hour chart you can see I have this Elliot wave structure in yellow, which is a fractal wave within that first wave to the upper side, where I believe we're in the formation of a fifth wave to the upper side to complete that higher Elliot wave count 1. And if I get a little bit into the details of the formation of that Elliot wave structure, so that it can give us the key scenarios that we expect to play out on this chart, after making our low down there, we saw a very nice bounce to the upper side, making our high for that first wave. And after seeing the high for that first wave, we saw a very nice retracement to the lower side in the formation of a wave 2. Then after making the low of that second wave, we saw a very nice bounce to the upper side in the formation of a third wave, making our high at around the $1.016 mark. And after making the high for that third wave, we have been seeing a very nice retracement over here in the formation of a fourth wave. And because a fourth wave is a retracement of the third wave, we can use the Fibonacci's, connecting them from the low of that wave 3 to the high of that wave 3 to give us a minimum target area to the lower side in the formation of that fourth wave between the fib level 0.382 and the fib level 0.618. and I can mark that target area here on the charts like that, which perfectly lies between the $0.81 mark and the $0.66 mark, and that is the minimum that I expected that fourth wave to retrace into. And you can see in this movement to the lower side in the formation of that wave 4, we have retraced into this target area, making our low at around the $0.69 mark. And because a fourth wave is a corrective wave, I also expected to see an ABC corrective movement play out over here, and I believe we are seeing such a structure, having this as the wave A, then a wave B making its peak at around the $0.94 mark. Then we continued pushing low in the formation of a wave C, making our low at around the $0.69 mark, which is within this target area that I have drawn out here on our chart. And after making that low down there, we have been seeing a very nice bounce to the upper side, managing to break above key areas of resistances. And that movement to the upper side, I believe, has been obeying an Elliot wave structure to the upper side. And since it's the formation of a fifth wave, which is an impulsive wave, I also expect to see fractal waves in formation within that fifth wave to the upper side. And before I get to the key scenarios that I expect to play out, basing it on the Elliot wave structures, I want to show you the key chart patterns that we have information right here. Within the formation of this fourth wave, you can see the price had been trading within this massive channel, which is a descending channel, and at some point right here we managed to break out of the channel to the upper side. And after seeing the breakout, we tried to have a retest in this movement right here, but the retest was not a success, and we managed to get back into the channel once more. But lucky for Polygon Matic, we have a key area of support at around the $0.78 mark, which gave us support. Then we saw a very nice bounce to the upper side once more here on the 4-hour chart, managing to break out of the channel once more. We even saw a retest of the upper side of the channel, and after the retest was a success, we continued pushing even higher, getting back to around the $0.96 mark, which is slightly above a key area of resistance at around the $0.95 mark. And after seeing that high, we saw a bit of a pullback over here, then tried to break above that key area of resistance once more with no success, and we are seeing another pullback to the lower side. And we also have another chart pattern, which is also a channel which has been well respected. And if I draw it out, we can have these as the lower side of the channel like that, then this is the upper side of the channel, and you can see that Polygon Matic has also respected this channel that I have drawn out here in red, and we managed to break out of the channel to the upper side, even so a retest, and then continued pushing even higher. And getting to the key scenarios that I expect to play out basing it on the Elliot wave structures, after making our low down there at around the $0.69 mark, we saw this impulsive movement to the upper side in the formation of a first wave, which I can term as a first wave to the upper side, then a wave 2, then this impulsive movement to the upper side in the formation of a wave 3, then I'm expecting a fourth wave, then a fifth wave to the upper side. And getting a little bit into the details of the formation of this fractal wave within that higher Elliot wave count 5 to the upper side, after seeing the high of that first wave, we saw a very nice retracement over here in the formation of a second wave, and using the Fibonacci's, we can get to see whether this wave 2 has done the minimum that we expect a wave 2 to do by connecting the fibs from the low of that wave 1 to the high of that wave 1. And you can see our wave 2 over here retraced between the fib level 0.382 and the fib level 0.618 and managed to break out of that target area, retracing back to the fib level 0.78 fib level, which perfectly lies at a key area of support, which gave us support, then saw a very nice bounce to the upper side in the formation of this wave 3. And using the trend based Fibonacci, we can get to see whether this wave 3 has done the minimum that we expect a third wave to the upper side to do by connecting the fibs from the low of that wave 1 to the high of that wave 1, then dragging the fibs to the low of that second wave. And you can see that my target area to the upper side in the formation of this third wave perfectly lies at around the $0.098 mark, and that is the fib level 1.618. and you can see we have made our high in the formation of this third wave at around the $0.96 mark, meaning there's a 0.3 difference from the high that we have currently and the target area that we have sketched out using the trend based Fibonacci. And having a 0.3 difference means that maybe there are high chances that the high was in at around the $0.96 mark. So there's a high possibility that the high was in at around the $0.96 mark, and whatever we are seeing over here is just a bit of a pullback to the lower side in what is forming a fourth wave to the lower side. And assuming the high was in at that point, we can sketch out a target area to the lower side in the formation of that fourth wave using the Fibonacci's, connecting them from the low of that wave 4 to the wave 2 to the high of that wave 3, and that gives me a minimum retracement area between the fib level 0.382 and the fib level 0.5, and I can mark that target area here on the charts like that, which perfectly lies between the $0.87 mark and the $0.84 mark. And we can extend that target area to around the 0.618 fib level in case we continue pushing even lower, and that is the minimum target area that I will expect that fourth wave to the lower side to do. And to support that movement to the lower side in the formation of that fourth wave, we also have another key chart pattern in formation right here, which is supporting this movement to the lower side by to retrace into this target area that I have drawn over here, and that is a double top. And if I draw it out, we can have this as the first top to the upper side, then we saw a bit of a retracement forming the neckline, then saw a very nice bounce to the upper side forming the second top. Then I'm expecting now a breakout out of this chart pattern, and this is a chart pattern that normally breaks to the lower side, having the target area of that breakout as the height between the head, and that is the tops and the neckline. So using a trend line, we can get that height and then place it down here below the neckline to give us a minimum target area back to around the $0.83 mark. So there's a possibility, in case we see a breakout out of this chart pattern right here, we are going to get back into this target area and maximize the formation of a fourth wave before we continue pushing higher in the formation of a fifth wave. There's also a possibility that maybe the high is not yet in, and we might be able to have the volume for us to continue pushing the price even higher, manage to break above the key area of resistance at around the $0.95 mark, have a successful retest of that key area of resistance, and continue pushing even higher to get back to around the $0.98 mark, or maybe above the dollar mark in the formation of that third wave to the upper side. And in case that plays out, then we'll be able to sketch out a new target area in the formation of a fourth wave and then a fifth wave to the upper side, and also sketching out a target area to the upper side in the formation of this fifth wave to the upper side right here. We can use the Fibonacci's, connecting them from the low of that wave 1 to the high of that wave 1, then to the high, dragging the fibs to the high of this third wave that I have right here, and that gives me a minimum target area to the upper side in the formation of a fifth wave at the fib level 0.618, and that is at around the $1.07 mark. So let's be patient and see how that plays out. Also taking a look at the indicators to see what movements will be supported here on the RSI. Here on the RSI we are trading at around the 43 mark, meaning we have massive room for us to support any movement to the lower side in the formation of that fourth wave, and also to support the breakout out of that double top that I have drawn out. Also taking a look at the MACD, here on the 4-hour MACD we have printed a bearish cross, and that means lower prices are coming our way. So let's be patient and see how that plays out, and I'll keep you updated.